Hello, everybody. Welcome to Blockchain Bylines. I'm James Ambrose, Head of Trading Operations and Treasury Services here at Blockchain.com, filling in for our usual host, Nick Carey, today. Blockchain.com has just listed ENA, the native token of the Ethena protocol, and I'm joined here by Conor Ryder, Head of Research at Ethena, to dive into the ecosystem, the mechanics of ENA, what Ethena is building behind the scenes. So thank you for joining us, Conor.
Thanks for having me.
A little special on today's podcast. We might keep track of how many times we say the word stablecoins throughout. I know that is front of mind for everyone in the space right now. I was just at the conference last week. I think the word stablecoin had to be mentioned over 150 times over the course of probably around a 4-hour multiple panels. So I'm sure we'll tackle that one quite a few times as we go through it all. But I think kind of as a first question, if you could explain to me the core mission of the Ethena protocol, the different tokens that you guys might have throughout the ecosystem, and specifically, as we just listed ENA, what is ENA's role in the whole ecosystem there?
Sure. There's 4 different tokens in the Ethena ecosystem, which can confuse people, but I can give a quick high-level overview of the tokens. The main one is the synthetic dollar, USDE. And what that essentially means, a synthetic dollar, is that we take crypto collateral, so you can think of the major assets like Bitcoin, ETH, and Solana, and we use that spot collateral as a margin collateral for a short perpetual futures position. So what that essentially means is that the two positions offset each other from a P&L perspective. So when the price of Bitcoin goes up, your spot Bitcoin value goes up, but your short perpetual future loses in value as well. But the two offset from a P&L perspective. So the output of that process is this synthetic dollar, USDE. And what's interesting about that is you're using kind of crypto native collateral as well. So that was something in my research in my previous role, we needed maybe more of a crypto native solution for a stablecoin that wasn't algorithmic, that was fully backed and everything. So that's kind of where Ethena was born out of, and that's USDE. So that was the fastest asset to reach kind of 5 billion in supply in USDE terms in crypto's history. And it stands at about 5.5 billion in supply today. We then have staked USDE, so that's SUSDE. And what that essentially allows users to do is earn rewards on their USDE position. That they earn the rewards that the Ethena protocol generates. We generate protocol revenue from the majority of the protocol revenue comes from something called the funding rate, which is a kind of nice feature of being on the short side of perpetual futures. You tend to get paid something called a funding rate, which essentially balances out the difference in demand between the long and the short side of perpetual futures. So because there's more demand usually to go long crypto assets, the shorts tend to get paid an 8% a year on average funding rate. And staking USDE allows kind of users to earn the protocol rewards. And last year, SUSD was able to return a 18% average APY, which is pretty powerful when you consider a lot of the other kind of stable coins don't even return rewards to users. So I think that was a big reason for the growth of Ethena last year, for sure. Third product then is USDTB, which is more of a kind of standard fiat collateralized stablecoin. It has BlackRock's BUIDL as the main backing asset there. So that we would call a stablecoin. That's more traditional. That's at about 1.4 billion in supply. And then finally we have ENA, the kind of native token for ENA, the governance token. And yeah, where you see a lot of kind of users take a investment into the Ethena ecosystem.
Got it. And you could stake Ethena as well on the protocol, correct?
You can stake ENA in the protocol as well. Exactly. Yeah. So that lets you earn rewards. And that's kind of a big use case now for Ethena, is earning rewards for kind of partner protocols that might be building with USDE and they want to align with the Ethena ecosystem. So we have some really exciting projects doing that. And yeah, Ethena is kind of earning rewards at the moment.
Can you speak to the differences maybe between USDE and some of the other stable coins that you might see on the market today?
So yeah, I guess probably the first thing to say is that we call ourselves a synthetic dollar, not a stable coin. That's a very conscious decision that we made coming out when we launched. We rightly received some like skepticism from users that had just been burned from Terra and Luna, and they had a lot of kind of PTSD with new stablecoin designs. So we wanted to kind of take a lot of that feedback on board, and we didn't want to come out and call ourselves a stablecoin, which you might have seen Terra do. We thought like a synthetic dollar is kind of a true reflection of maybe some of the risks involved in the protocol. We tried to be as transparent as we could about the different risks that were involved. This doesn't look like a normal fiat collateralized stablecoin. This obviously is introducing a new kind of mechanism to the market, which a year and a half later has held up like extremely well. USDE is pretty much never depegged. It survived things like the Bybit hack earlier in February, pretty much without a hitch. We just wanted to be transparent about the risk and call it a synthetic dollar. So that's probably the first difference. And then the main one is kind of what I mentioned earlier about actually kind of returning rewards to users. You see with USDC and USDT, obviously, I'm not saying they're not extremely successful products and they're really pushing the space forward. They are. But what they do is they kind of offer users pretty much return-free risk. You saw with like USDC's DPEG in 2023, where the issuers, I guess, are internalizing all the revenues, but externalizing all the risks onto users of a DPEG. And then you see the likes of Tether is like pretty much the most profitable business in crypto, and maybe on a per employee basis, maybe in the whole in the whole of finance. So yeah, we just kind of made a fundamentally different design choice there to try and allow users to kind of earn returns on their holdings, which is really interesting today in terms of like high inflationary, high interest rate environment, being able to kind of protect users' assets a bit better. And then it also is interesting when you take a step back and you look at some of the integrations that Ethena has throughout DeFi and CeFi. Like we're integrated on Bybit right now, and users can actually earn rewards on the collateral that margin their per positions, which is super interesting because normally that's collateralized in USDC or USDT and you're not earning anything. You use USDE and you're earning 10, 12% a year. So yeah, we just felt we needed to come out with something that was kind of fundamentally different to those two big stable coins, and the market seemed to like it over the last couple of years.
Yeah, absolutely. You guys have seen quite tremendous growth. And I think a really key word and topic that you've brought up probably 5 or so times during that last monologue is risk and risk management. And so how do you guys think of risk management as it relates to the Ethena Foundation and protocol, and specifically around USDE and yield generation? Obviously, you guys are trading on centralized venues. Like, how are you managing your venue risk or risk that the funding rate might flip and kind of volatility there?
So yeah, there's a lot to dig into there. So I might keep it as high level as I can. If you look at our docs, we've got, like, as I said, when we came out at launch, we wanted to be extremely transparent, and we obviously had to build a lot of user trust. So we've kind of detailed, I think, 6 or 7 different risk factors here with Ethena that you don't normally get in other protocols, and kind of how we're going about mitigating them. So maybe just to touch on the 2 that you mentioned. So one would be counterparty risk, where we touch centralized exchanges. So the way Ethena works is we actually custody all of the assets in institutional grade custodians. And the nice thing about that is that all the collateral is actually stored off exchange. So what the exchanges do is they do have a read through into the custodian account, and they mirror the assets on their own exchange. So if something happens, like say for instance, the Bybit hack there in February, if an exchange was to fail, it's simply a case of pretty much undelegating a position from one exchange to another via the custodian, because the assets itself don't sit on the exchange. So this is something that wasn't exactly possible more than maybe like 2 years ago. It's kind of a new rollout, which is great, at called off exchange custody. So that's one way we're mitigating that risk. And as you saw throughout the Bybit hack, we were able to do that, undelegate positions from Bybit in the kind of heat of the moment. The other one you mentioned was funding rate risk. Yeah, so that's the risk that's definitely relevant to Ethena. Funding rates on average, as I said, tend to average around 8 to 10% a year, but there's days and weeks where that funding rate does go negative. It's actually never happened since Athena's been out that we've had a full week of like negative returns or anything like that, which is great. But on the off chance that we do, we have something on the side called the reserve fund, which essentially sits there as, it's about 60 million in size now, but it's there essentially for the rainy day when there is kind of negative protocol revenue or any black swan event. So yeah, the second risk that we mentioned was funding rate risk, and that's a risk that is relevant to Ethena. When funding rates flip negative, which they do tend to on occasion. For context, it's never actually happened since the launch of Ethena, and in over a year that funding rates have been negative over the course of a week, and they tend to average about 8 to 10% positive. But there are days where funding rate goes negative, and there might be times in the future where that happens. So we've got something on the side called the reserve fund, which we were able to build up as we launched when we sent a portion of protocol revenue into the reserve fund. That reserve fund is about 60 million in size now. It's quite well capitalized, and it's there for that rainy day. If on a week protocol revenue does turn negative, we have this reserve fund we can call upon and help mitigate some of that risk. But yeah, as I said, long term, our funding rates have been around for 4 or 5 years, and they've averaged kind of 8 to 10% a year, which helps.
Got it. And a question I have regarding a lot of the perpetual futures trading you guys are doing, is that entirely algorithmic driven, or is it partially discretionary, and kind of what is like the human interaction as it relates to getting in or out of those positions?
Yeah, it's a good question. Most of it's algorithmic. It kind of needs to be kind of fast paced and everything. there are times when we kind of would manually intervene on certain like market conditions if the market is quite volatile, or things like the Bybit hack where we need to step in and react quickly. There'd be manual intervention there, but most of it kind of runs itself at this stage.
Got it. And maybe just to dive a little bit deeper into the utility of the actual ENA token within the protocol, can you just get into that a little bit?
Yeah, sure. As I said, ENA launched as really just a pure play governance token. It allowed ENA holders to vote on kind of some critical matters of the protocol. And it's kind of evolved now when we've rolled out staked ENA, I think about halfway through last year, where now ENA stakers can kind of earn rewards. One of the really interesting elements of that is we're kind of trying to emulate what Binance do with BNB, where users kind of use BNB and stake BNB to earn airdrops from other tokens. So ENA stakers have already received a couple of airdrops from kind of partner protocols. Some of them would have been on the smaller side. The interesting one that's probably coming up is Ethereal. So that's like a kind of like a hyperliquid kind of looking perp dex, but except it's built on USDE. And they've actually committed publicly to giving 15% of their token supply, 15% of the token supply to ENA holders. So yeah, that has like 700 million of TVL. Ethereal does, so that could be super interesting, and that's kind of where we've seen a lot of the excitement lately with ENA holders is kind of via Ethereal.
What do you think the kind of long-term application is of the synthetic dollar token kind of being what I'll call a yield-bearing stablecoin, yield-bearing synthetic dollar? Do you think kind of long-term as an intermediary or unit of payment between two counterparties, or kind of just a yield-bearing, I'll call it savings product? What are you guys thinking a little bit more medium to long-term there?
Yeah, probably the latter. You touched on the kind of savings product element. I think something that's really interesting that we've kind of been working on in our roadmap now, and we've had a couple of recent launches to do with it, is a Telegram integration. So we've integrated on Ton and Telegram wallet. So Telegram is like over 1 billion users, and there's nearly 1 billion worth of stablecoins on Ton itself. But again, that's mostly kind of denominated in USDT, earning users kind of no rewards or anything like that. That's proven pretty useful for Ton users accessing Tether, for being able to protect against their local currency inflation and things like that. Like if you think of most of Telegram's users, it's probably a fair assumption to make that a lot of them are from maybe developing countries, and it's quite global by nature. They're not all based out of the US and things like that. So access to dollars is a huge thing. But then also now we've integrated SUSDE with the Telegram wallet. And yeah, users are able to earn this kind of double-digit APY, and that's super interesting. It's like a unit of like savings, and being able to not only kind of protect against their domestic currency inflation, but then also to be able to actually earn kind of sustainable reward rate through the SUSD integration is super interesting. And I think that's like a huge use case for stablecoins. Maybe if not the biggest, is this kind of like financial inclusion element, providing dollar access to kind of billions of users around the world. That's one of the most like fundamentally, I think, important things that we can do as an industry. But then also maybe the differentiator between obviously us and USDT is probably the kind of APY that you can earn staking. So that hopefully provides users with another element to protect against inflation and different things like that.
Appreciate that. And maybe to steer things a little bit differently. So obviously USDE generates its yield from trading the perpetual futures on ETH. You can trade perpetual futures in really any currency at all. Oftentimes that's a lot more volatile, but do you guys see any form of future expansion into generating this yield in a fairly risk adverse way and kind of expanding that way horizontally away from ETH into other protocols or chains?
Yeah, no, it's a valid question. So when we first rolled out, it was actually only ETH, and we used like stake ETH as collateral and things like that. And then we obviously realized that the more this thing grows, you need to access kind of bigger markets. You need this thing to be more scalable. So we added Bitcoin as a collateral asset. And it's been this process now where we have a risk committee of like 4 or 5 different risk professional advisory firms, the likes of Blockworks, Llama Risk, who are quite relevant throughout DeFi. And they were essentially responsible for approving kind of eligible backing assets in the system. So yeah, in short, I think you can kind of onboard most assets, but you want to do it in a way that makes sense from a risk reward perspective. What we're working on at the moment is having this kind of like framework for eligible backing assets. So you might see that coming out as something like a minimum of open interest that's needed to kind of be an eligible asset. So you can think of something maybe like a minimum of $1 billion in open interest. So that might add like XRP or hype or different things like that. Probably just the biggest assets. But yeah, for sure, as assets grow and maybe the whole market grows, that kind of makes more sense from a risk reward perspective to onboard more assets. You're increasing your addressable market, but then you're also can kind of tap into the funding rate of different tokens depending on market conditions.
Are you guys gonna enable a fart coin as collateral anytime soon?
We're not probably not too far off if it keeps growing, but nah, I don't think that's coming anytime soon.
Hey, funding rate's been juicy recently. So where do you think we currently are in the cycle for stablecoins? Obviously, Circle just IPO'd. It absolutely, completely monstrous in the space. Everyone's talking about it. Lot of other companies, protocols launching their own stablecoins. RWAs is an absolute buzzword that you hear pretty much every other day too. So where do you think we are with all that and kind of in the evolution cycle? And where do you think Ethena's part is in all of that?
Yeah, it's a good question. So like the stablecoin narrative is pretty much as hot as it's ever been. And it is great to see, like a lot of us have been kind of banging the drum for stablecoins for years. So for me, yeah, I'm obviously biased, but I think it's like the shining kind of use case the industry has. If you look at probably the two main use cases for crypto, the other main one is probably speculation. And maybe that's not as good of a kind of use case for crypto. It's debatable, but I don't know how much value that adds to the global finance. Like if you look at the past 5 years for crypto, it's really maybe only in the last like 6 months that people have kind of veered more towards stable coins as the primary use case. Before that, it was, you look at like DeFi summer, you look at NFTs, meme coins, like even probably the two most successful businesses out of the last cycle were probably Pump.Fun and Hyperliquid, both kind of very closely associated with that kind of speculation meta. Whereas now I think maybe what we're seeing is kind of the institutional interest veering more towards stablecoins, which I think is probably a more sustainable and maybe a better narrative for kind of crypto to go mainstream. Yeah, like you look at, there's so many reasons that we can get into as to why like stablecoins are a kind of good use case for crypto. We touched on the financial inclusion earlier, faster and cheaper kind of cross-border payments. You're seeing now every week there's pretty much a new business or bank or institution kind of integrating stablecoins. We saw JP Morgan recently, Walmart, Amazon. So you're just seeing kind of integration after integration, and it's all these businesses waking up and realizing that like stablecoins are fundamentally kind of efficient concepts and they can actually transform their business models. And that's kind of what we've been talking about for a few years. And maybe it was kind of drowned out a bit by things like NFTs and stuff like that. Now we're seeing that come to fruition. And I think it's definitely like a healthier narrative. So I definitely wouldn't say we're at the like top of stablecoin interest. It's obviously quite hot right now, but I think it does have room to run.
I think it's been now probably 4 years that I've been hearing that the institutions are coming. Do you think they're here or do you think they're not here yet?
I'm glad you said that because that's another thing. The biggest item on probably Athena's roadmap is Converge. So it's this joint blockchain initiative we're coming out with Securitize. And that's one of the kind of narratives behind the reason why we launched Converge is essentially we've talked about institutions are coming for 4 or 5 years, and I still don't really think they are. Maybe I think you could argue that they've started to arrive now. So probably with the launch of the ETFs and now IPOs, I think they're arriving and they're definitely like very interested in crypto. And that's obvious to see with the kind of success of the Circle IPO recently and things like that. But when you look at what crypto is actually built, things like layer twos and like our institutions actually using them today, probably not. So we were kind of thinking of reasons why that is and talking to institutions and things like that. And a lot of them actually can't invest in like digital assets in their current form. A lot of it's for regulatory reasons, like dealing with sanctioned entities and things like that. So what we're doing with Converge is we're creating obviously like the permissionless side of things as well. That's very important, but also permissioned finance where it's KYC and the things that really get institutions comfortable with kind of engaging in digital assets. And we're really going after that kind of market. We think if you look like in 5 or 10 years time, the market for kind of tokenization and settlement of dollars is far bigger than the market for speculation. And yeah, I'd agree with you that the institutions, they're probably here maybe, but not actually kind of engaging in crypto infrastructure.
So what are you most excited on the roadmap for Ethena over the next 6 to 12 months? You obviously have just touched on Converge. If you want to go a little bit deeper into that, kind of what you guys are doing there, and really just any other developments that you guys have on the roadmap over the next little bit.
Yeah, sure. So Yeah, Converge is probably the biggest item on the roadmap at the minute. So as I said, I kind of touched on the reasons why that might be interesting. Yeah, between Securitize and Ethena, we have about 10 billion in kind of TVL, and Securitize of clients, yeah, like Apollo, BlackRock, KKR. So there's some big names there. And we're really targeting to kind of and trying to be the like default kind of issuance hub for those clients. So pretty excited about that. And we have the thing that'll power Converge is, especially on the permission side, is IUSDE. So another token we're releasing, but that's essentially like a permission version of SUSDE. It's KYC'd and everything, so that these institutions, though, they're not dealing with any kind of sanctioned entities or anything like that. And we think that's like this net new kind of asset that institutions are able to invest in. And we just don't think they're going to be able to invest in a lot of the infrastructure that's built today. So as I said, that's a kind of exponentially bigger market that we're targeting, and hopefully USD supply is kind of boosted as a result. And yeah, other items we probably touched on as well. Ethereal is set to launch mainnet, I believe, in a couple of months. So that'll be super interesting. See if it kind of gets any traction like Hyperliquid. It's an external team that's building that, but it might be the kind of first time we see a kind of like a mainstream crypto product actually built on USDE, which I think is super interesting. And yeah, you can margin all the kind of liquid spot and per pairs there will be collateralized with USDE as the kind of quote asset. So yeah, the super interesting there. And then at the Telegram integration, which we touched on, we actually just launched the Telegram wallet integration last week. So super excited to see the pickup there and see if we can roll out any new products after that.
Yeah, really appreciate that. I think the most interesting part here is that you guys have made USDE so easy to hold with a lot of your SEX integrations and things like that. And so if people are going to hold the stablecoin on exchanges, they should probably hold the synthetic dollar and earn that yield, right?
Yeah, that's kind of our hope as to what people really realize is that, like, why does it make sense to hold a USDT or USDC on an exchange that's integrated with USDE when you could, be earning that 10 or 12% a year in rewards? And that's fundamentally kind of an interesting idea. I think for the most part, people use Tether and Circle on these exchanges for liquidity reasons. So that's probably the big kind of challenge for Ethena, is seeing if we can match those assets from a liquidity perspective. I think we're probably less focused on challenging them on the distribution side of things, and maybe from liquidity as well, just because they're so ingrained on these exchanges and throughout crypto that's a pretty hard challenge. What we're focusing on is obviously this net new returning rewards back to the user type thing, which neither of those issuers do.
Yeah, I think this is such an interesting project because it really, while obviously you guys are DeFi protocol, it really is bridging the gap between centralized exchanges, centralized venues, regulated counterparties, and trying to incentivize the big banks to, I'll say, dabble their foot into the crypto ecosystem quite a little bit. So how have you guys navigated, the permissioned versus permissionless, the DeFi Wild West versus the very regulated environments, which a lot of the big banks operate in, and how have you guys been able to kind of work through all that?
Yeah, I guess if you look at the name we chose for the kind of new chain we're coming out with is Converge. And the thought process behind that is that we're hopefully going to be the vehicle by which kind of all these different sectors converge. So you think about, like, initially we're this DeFi product earning a CeFi rate. So that's interesting in itself. We're bringing like centralized exchange interest rate into DeFi, which had never been done before. Now we're essentially bringing that rate, or trying to bring that rate, into TradFi. And what we think is that obviously the bigger and bigger Ethena gets, these rates will all converge. So whether that's a DeFi kind of borrow rate, that might increase to kind of match the funding rate on centralized exchanges. And then, you look at like a TradFi interest rate where they might need 8% to kind of access USDE, and those rates kind of adjust as well. So we think we're just going to be basically a vehicle where the different kind of interest rates can converge. And like that's essentially what the whole thought process was behind the kind of chain initiative, is converging. And that's why we're a good partner, I think, to launch the chain. We've done that already with DeFi and CeFi, and the aim now is to do it, I guess, between DeFi, CeFi, and TradFi.
Everyone's been calling for altcoin summer for quite a while now. And this 4-year cycle has been quite different than anyone else that we've seen before. Do you think the 4-year cycle is over? It's done? Do you think we're officially past that as an industry, or do you think we're still within that and coin summer is going to come, or is it just a stablecoin summer?
Yeah, it's a tricky one. I'd veer on the side of like this cycle, and probably future cycles won't look like the last. Like I don't think they'll repeat exactly in these 4 years. I can't really say whether or not they'll get longer or shorter. That's really anyone's guess. I just think they'll look a lot different now, especially with institutions coming in. And that's really the main reason, I think. I think one interesting dynamic to see will be if interest rates get cut, what'll happen then to, I guess, like meme coins, altcoins, but also then the biggest stablecoin issuers. Like you look at USDC and USDT, they rely on those kind of interest rates to earn their revenues. We saw with USDC's filing, revenues quite tight anyway. But what actually then might happen then when interest rates get cut, you'll see maybe a kind of like this renewed maybe altcoin season. Another interesting dynamic there is that funding rates tend to increase when interest rates are cut, because that kind of animal spirits come back and people sentiment picks up and people are more willing to go long. So you can probably guess where I'm going here, and that Athena's revenue then hopefully increases in that scenario, and we're kind of nicely positioned there hopefully. So yeah, to answer your question, I think it'll look different, but I think now that hopefully the institutions are finally coming, I think we'll see the cycles look differently in future for sure.
It's an interesting, I'll call it cascade of events. Interest rates get cut, people get more bullish, the funding rate blows out a little bit, USDE earns a better yield. So I don't know, it's just an interesting observation that I kind of
yeah,
put
no,
together with those pieces of the puzzle, right?
And I feel like not a lot of people do realize that. I think just the kind of nice counter effect it has, especially maybe versus the other stable coins, which are a hot piece of the narrative right now, is when, and the market predicts, I think, 3 interest rate cuts over the course of a year. So it's not like we're predicting something that mightn't happen here. The market consensus is interest rates are coming, interest rate cuts are coming. And yeah, Athena's really only existed in a high interest rate environment as well, which is another interesting thing. So yeah, super interested to see how that plays out. Obviously, like the bigger and bigger Ethena gets, we will compress funding rate, and that kind of comes back to this convergence. I think all these interest rates will eventually look kind of similar the bigger Ethena gets, and yeah, that's kind of natural, I guess. But that mightn't happen until Athena's in the tens of billions of size. So it's still probably a good outcome regardless.
Yeah, the funding rate is just a byproduct of classic supply and demand.
Yeah,
so
exactly.
If more people are going long than short, the funding rate is one way. So as long as people are bullish, and the larger Ethena gets, the longer per positions that you guys are going to put on the inverse, right? And so that'll kind of net out the side supply and demand over time. Obviously, I'll use your buzzword, converge the funding rate back to neutral.
You see that on the flip side as well now when funding rates get lower or dip negative. What we end up doing is people redeem and we close short positions. And when we close short positions, that actually has the effect of lifting the funding rate again. So it has this kind of nice counterbalance effect where it'll probably end up at some equilibrium rate over the long term, where even when funding rates dip negative, they have this mean reverting effect where we lift the shorts and they'll probably increase to positive again. So it's all about just kind of thinking where this equilibrium rate will settle. Maybe that looks kind of like a crypto risk premium, maybe like 8% or something like that. But yeah, over the last 3 years or so, it's averaged out at like 8%. So that's where the market puts it at right now.
Yeah, I think naturally those will probably all converge around the staking yield, right? Because people who are staking are going to hedge their rewards on a centralized venue to try to lock that in. So, I think to that extent, all these things will kind of converge into a place that makes sense from an economics perspective at the end of the day.
Yeah, exactly. It's up for debate where that interest rate kind of lands. I would say you probably have like a risk premium there as well for keeping assets on like in a centralized exchange, or whether it's a hyperliquid or something. Yeah, traditional investors definitely price that in at 2 or 3%, let's say, for actually parking your assets there. We've seen hacks both in CeFi and DeFi. So it's definitely not like just a staking yield. I'd say it's another couple of percent higher. And then maybe, a general kind of crypto risk premium on top of that. I don't know. But yeah, that's up for debate, I guess, where it lands.
So far this cycle, we've seen Bitcoin treasury companies, ETH treasury companies, hyperliquid treasury companies. Are we far off from an Ethena treasury company?
I can't say too much about that now. So we'll have to wait and see.
We'll use that one for clickbait. Yeah, appreciate that. If you could take any big bet, how do you think stablecoins and the synthetic dollar are going to be reshaping global finance over the next few years?
Yeah, as I said, I think we have this prediction from like Scott Besson, let's say, that market cap of stablecoin is going to 3 trillion. That's over like a 10x. And that's probably like maybe a decent estimate over what time horizon. And that's kind of anyone's guess. I think, yeah, people are starting to realize now it's a no-brainer of how they make businesses more efficient. That's why we're seeing businesses come out every week now and talk about how they're exploring integrations. Yeah, you look at the kind of biggest banks. It's I think what stablecoins will do is they'll probably power a lot of the back end of these systems. We mightn't notice it's going on through an app or anything like that, or when we're paying by card. But I think what might happen is they're using these kind of stablecoin networks or crypto networks to settle transactions. So as we've said, there's kind of settlements 24/7, cheaper cross-border transactions, and then like reduced counterparty risk. Obviously, everything's on a public blockchain, and you have a kind of history of transactions, and settlements are quicker. So there's a ton of different reasons that are pretty much quite well known at this stage. I think, yeah, what's going to happen is it's just going to modernize kind of global finance, which is pretty much due for it, to be honest. It's probably the only sector of business nowadays that hasn't really had a huge innovation. Maybe since like fintech, it hasn't really been innovated on. It's still on a lot, like settlement cycles are still on like T+1 or T+2 with the biggest banks, which is crazy nowadays. That was the case that like 100 years ago. So I think people are starting to wake up to that now. And obviously as kind of regulation of crypto moves more mainstream, you'll just see kind of businesses coming on and integrating with stablecoins.
I think to the extent of, all those reasons why stablecoins are going to reshape the global economy, like, do you think that there's ever going to be a point in time where digital assets and stablecoins flip traditional fiat currencies as the dominant means of payments and transacting for everyday goods and services?
I think that's maybe a bit of a stretch. If you asked me 2 years ago, I probably would have said definitely not. Now I think it's a bit more interesting. Like I said, I think they will power the back end of a lot of these solutions. I still think governments will want to retain as much control as they can over kind of the currency that the nations are using. We see that with their push for CBDCs. Even like a few weeks ago, the EU was kind of freaking out over European users using US stablecoins, thinking that's kind of, and the easy assumption there to make is that stablecoins will kind of further US dollar dominance, which I'd agree with. A lot of these stablecoins use dollar denominated assets in their backing anyway. They use treasuries. So I don't think they're going to completely usurp like fiat currencies. I think that's definitely a bit of a stretch. But as I said, I think what's going to happen is they'll modernize these legacy payment rails. I think they'll be integrated pretty much everywhere we look. But it might be more like these kind of fiat, maybe payment providers are using stablecoins as like an on and off ramp type scenario where you're maybe off ramping into fiat to pay at the final hurdle, but they're using stablecoins in the back end.
I think, just to close again, Conor, like really appreciate your time today. This has been a super educational session. How can people, the everyday user, use the Ethena protocol kind of as a start if they want to start getting involved in the ecosystem?
Sure, yeah. So you can acquire USDE on a lot of decentralized exchanges, as we talked about. Come to our app.ethena.fi. You can stake USDE to start earning rewards and things like that. And just kind of, you can follow along with the ecosystem there. It links to the different protocols and integrations. And then I guess on Twitter, we're at Ethena_Labs.
All right, sir. I think that's all I have. To our listeners, please don't forget to subscribe to our channel, leave a review of today's episode. On behalf of the entire blockchain.com team, thanks for tuning in. Special shout out to Nick for letting me fill in for him today. And we'll see you next time. So Conor, thank you so much for joining us.
Thanks.